Hello, everybody. Hope you are enjoying your Thursday and the last week here in March and I guess the quarter as well. We have a lot to cover this week with a little bit of a broader view on the markets. Again, we had a great question of the week on kind of why is the market staying so strong given all the challenges that we still face. And so I figured this would be a great opportunity to step back and just kind of put some things in perspective a quarter into the year here. But we also have consumer confidence coming out this week, or that came out this week, initial jobless claims as well. So we'll start there. We'll spend some time on some of the data points this last week, and then we'll wrap up with our question of the week, just kind of a little bit of a step back on the broader markets. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, data, trends that we're watching, and hopefully weed out a lot of the noise along the way. So going back to Tuesday this week, we had consumer confidence numbers come out, and we saw this number come out at 104. Nothing really to write home about here, but I did want to touch on it briefly because obviously this is an important measure, especially in times like this when we're kind of watching more specifically the consumer, right? We've seen a lot of challenges. This will tee up our question, but a lot of challenges in other areas of the market, but the consumer is still strong. And here we're showing consumer is still confident as well. We also had today, we had the second revision of the GDP numbers come out. They fell just slightly. It fell down to 2.6, but still a good number given everything going on. And obviously we'll see what comes in the quarters to come. But again, this is a GDP revision. So this is looking backwards, just an update on the GDP number previously. We also had initial jobless claims come out today. Yet again, under 200,000. So we saw 198,000 initial jobless claims. Consumer, jobs market, you name it, seem to still be very strong, to say the least. And then before we get into the big question, coming up next week, we have income, PCE, and spending all tomorrow. Plus, we start Jobs Week, which will be a very important thing to watch as we turn over a new month. All right, with that, let's get into the core of today, which is the question of basically why is the market holding so strong given all the challenges? And where I want to maybe start and where I want to kind of take this is just a broader look and a step back at what's going on bigger picture, because here we are a quarter into the year, and we've yet again seen all kinds of news headlines and you name it. Obviously, we still have some challenges ahead of us, but we've seen stuff with Silicon Valley Bank. The Fed is like any other year, right? We have a lot of challenges and we're hearing a lot of noise. And the question is, how does this all really impact things or not? So the reason I wanted to start with a step back is because this year, if you look at 2023, the markets do look good. Markets are up from the start of the year. And depending on which index, could be up quite a bit, could be up slightly. But nonetheless, markets are looking pretty good year to date. Now, the reason I shared that is to take a step further back. If we go back to last year in 2022 and the highs going into the new year of 2022, markets are not up. And so, this is this phenomenon in our industry where when we look at market returns, a lot of times it's based on year-to-date numbers and it may not tell the full story. So although things may look good year-to-date in certain areas, certain sectors, you name it, when you look at it from the peak to where we are today, the reality is we are still down and still down at a pretty good clip, especially things like some of the tech industry, some of those areas that have been hit pretty hard during this pullback. So it's important to keep that in mind, right? If we look at year to date, it could tell a very different story than high to now. And the reality is what has happened is we've been in a range for 12 months now, really. Ever since we started pulling back, we've been in this range for this past year or so. And it happens that we are maybe towards the higher end of that range, right? The upper bound of that range. What comes next? Obviously, we'll need to wait and see. But again, it may make things look rosy on paper year to date. The reality is we are still in a bit of a challenge, and we still see a little bit of challenge ahead. But again, to be clear, we do kind of feel that the end of this is closer than it is than the beginning, right? So we'll kind of keep a very close eye on things moving forward, but it is important to kind of keep a perspective on that as far as a little longer time frame, as opposed to just looking year to date. And obviously, hopefully this is a good sign. Hopefully, again, we do feel that we are closer to getting out of this than we are the start of it, but only time will tell. Now, the reason that I think that is so important is because with that, a lot has changed as well. Rates are higher. Now we have some challenges with some of the banking industry, and more specifically, I think it's a little more focused, but there's been some challenges there. The Fed is now talking about potentially pulling back as far as their rate increases. So it's a very different story than it was last year. And so I think we'll continue to watch this, but know that these types of stories are what needs to happen for us to actually get out of the hole as well. We've been anticipating this recession, whether it comes or not, we will see, for a long time. And obviously we need a catalyst to get out of that. And it may take some negativity to get there. But nonetheless, if you look at it just based on the negative news, the market has kind of really been pretty resilient this year, regardless of what the Fed, the banks, the news stories have thrown at it. And I think it's important to kind of take that with a grain of salt, because again, at the end of the day, it's because the market has priced in a lot of this already. So with that said, more bad news obviously could mean a further pullback. It's hard to say, but we have been very range bound. And hopefully with some of this news kind of starting to settle, and then possibly the Fed pausing and or pulling back on rates, maybe that is where we actually start to see where we can crawl out of this and maybe actually see some gains in the market ahead. But I do think it's going to take some time to get there. So hopefully that is helpful. Very good time just to put a pause on things and talk about the bigger picture again. So join us next week. We have a lot to cover next week as we get into Jobs Week. We'll be sure to share with you what's going on there. In the meantime, have a great upcoming weekend, and we will see you next Thursday at 3.